Hey, this is Leo, and today we're going to be taking a look at Bitcoin. Not financial advice, not a financial advisor. So we're looking at the 1 week chart here for Bitcoin, and what I believe to be most likely is that we've put in a series of 1 2 1 2 1 2s. I think that works the best, especially given the deep retracements that we've seen relative to from here to here. These 80%, 70% corrections. It's much more typical uh, with a second wave rather than if this was a 1 2 3 4. Well, you just typically don't get that deep of a retracement with a fourth wave. It's much more likely it's going to retrace between the 382 and the 50% retracement. So we can also, let me see, where's the, so if we take a look at the fib time projection, we can see that it has projected the bottoms for Bitcoin very well. So this one exactly to the week on the 618 of the correction, and then it continues. So what I've done here is I've measured the length of the bull run, and then it projects it out 61. Well, I guess 61.8% of the bull run is what's being projected out here. So I'm going to go ahead and delete this just because I like to keep the chart clean. But if we come over here now and we take a look at the second cycle, you can see that pretty close. I mean, you came. If it ended here, it's questionable. Let's see. It looks like that's almost a. No, this one went a little bit lower. So this actually went longer than the 618. So I'm going to go ahead and delete that one, and then we can take a look here at the current run. Pull to the high. Okay, so I don't think that this was the bottom for the correction. I think that this was the end. And I think we put in some sort of a flat correction here, or possibly some sort of a combination correction. I would have to dig in here and do a more detailed count, but I think it's much more likely that the two ended here and it truncated rather than, well, I guess it came shy. It didn't make a new low, is what I'm saying. Just because this ending, I mean, it didn't even reach the 50, and we know the most likely target is going to be the 618 for the length of a correction. So I just think that it's more likely that this would be the bottom. Even if let's see if we bump it up to here. I mean, even there, the bottom didn't even reach the 50. So depending on I mean, technically that would be the bottom because that is the low, but I just think that the case for this being the low is it's much better than this being a 1 2 and we're on some really big third wave. It's very possible that that is the case, but looking at fib time, I tend to lean more towards this being the end, this being the two, and now we've put in a 1 2 3 4 5. It fits a lot better as far as the market geometry goes, because if you look here, there's your top, coming up on a top. Haven't really hit the line yet. It's questionable whether we would, but it would fit in with it being a 1 2 3 4 5, assuming that the market geometry is going to hold, meaning that it's going to stay within this channel. Um, Something else that would support that we have one more fifth leg to go up is that so these vertical dotted lines represent the halvings, which is typically after the halving happens, you see the bull rallies. I do believe that the cycles are lengthening. I've talked about that for a while now. Um, I believe, let's see here. So from the point of the halving, I believe that it's increased by 20%. I believe that's what this measurement was. And so then I projected it out here, assuming that that trend will continue, that from the point of the halving, uh, it's going to be 20% longer than it was last time. So measuring from here to the peak was 413 days, so it's going to be 120% of that for the next cycle. So here's your halving, 120% brings you out here to 497 days, and Where we are now would be uh, that would be looking at the 602-day mark, which would put the peak in around the end of January of 2022, which would line up with roughly where a fifth wave should be ending. So I think that the case for the fifth about to go in is very strong. That would put us at the top of this channel here. That would line up with the lengthening cycle theory. They're 20% longer after each halving, which makes sense because as the asset grows, it takes longer for money to be able to flow in and out of that asset. Whereas when it's smaller, money can flow in and out more quickly. That's why you see assets like gold, where they have like a $9 trillion market cap. It's because there's so much water in that pool. It's much more difficult to move around. Whereas if you have a cup of water, you can throw it around, do whatever you want with it. The other option here on this pitchfork is we take a look here. No, that wasn't it. Or was it? Is it this one? No. Maybe it was here. I'd seen something interesting. Where was it? And all I'm doing here is playing around with the different, there it is, different pitchfork options. And whenever you're using pitchfork, you're using the most significant pivots, the most recent ones. So that's a big significant pivot, significant pivot, significant pivot. What you wouldn't want to do is come in here, click, 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 right? Because that's not capturing the entire market structure, right? So then you just want to look for what's respecting the price the most. And so as you can see here, this little dotted line is one of your pitchfork parallels. So it's what basically anything that comes out from the median line here, the middle line, would be a pitchfork parallel. And so you can see that it comes up and respects it, respects it, respects it, respects it, respects it, gets through it, holds, a little bit of resistance, pulls back, finally gets through, respects it, respects it. So you see how you're seeing reactions on it. And so that's what you're looking for. And then especially here, as you get up to that third wave, I mean, it just ticked right along it and then it fell. So that's what you're looking for whenever you want to find a good market structure. So let's see, I'm going to go ahead and break it down on the smaller time frame, figure out where we are on the shorter term. I'm going to get a sip of coffee real quick. So this structure, what we're looking at here is the 1, 2, 3, 4, 5 of this little bull run that we're on. So if we come to, move this up out of the way. So this looks very much like we have a 1, 2, 3, 4, 5 down. I find it really difficult to get an ABC out of that. Now, it's very possible that it is, and it's looking more likely that that is the case, considering that we have had a golden cross on the daily here. That's typically very bullish. Come back over here, you can see we had a golden cross here, and then look what it did. So, the higher the time frame you see a golden cross, typically there's going to be more of a run. So, actually, I believe on AMC real quick, we're about to get a golden cross again on the 4-hour chart, but I'll dig into that later on with my AMC video. No, where was I? Now you can have, whenever you get into a sideways correction, the EMAs become less reliable because you're essentially within a range. So if you look here, you can see where's the, oh gosh, these tools, there's so many of them. There it is. So if you just look here, you can see that there is a range essentially that price was held within. Get that quick little wick out and then it comes back into it. But whenever you get into a trading range like that, the EMAs go flat. They're much less reliable. But whenever you're trending, they're much more useful than when they're in a range. So go ahead and get rid of that and get back on subject here. So the reason I've really broken it down in such detail is because I kind of just want to reinforce the importance of counting all your subwaves, because if you don't, it can be a little bit more challenging to get the correct count. So you have a 1, 2, right? 3, you get that triangle pattern there for a 4. It's very typical. So But more importantly, you want to make sure you have a 1, 2, 3, 4, 5 for the third, because that's going to confirm that, okay, this is likely a third wave. You got to measure out your most likely projections. So, come up here. Is that it? I can't tell. Measure it on up. So 618, that's about right. So, or 1618, excuse me. So it's likely that somewhere in there is your third, right? So then what you do is you have to get in there, count your subwaves, and okay, well, there's 1, 2, 3, 4, 5. Okay, so that's probably the end instead of it being here. Um, so that would be the third, then you get the four, and then you get the fifth of the one wave of this bull cycle that we're on. You get this quick little second wave, and then we get 1, 2. And now this gets really tricky whenever you have a series of 1, 2s because people can think there's some part of a correction. Um, so that's why it's so important to be able to kind of validate your waves. And what I found to be the most helpful is to, whenever you get a series of 1, 2s, what I like to do is I like to move inward, right? So I would start counting 1, 2. Okay, where's my throw? Okay, 3, 4, 5. Once I have that, I go out 1 degree. So then I go, okay, well, here's 1, 2. That must be, I have 5 waves up here, so that must be a third of something. 4, 5. Okay, well, that's interesting. So then, okay, go out 1 more degree. 1, 2, 3, 4, and then 5. So that has helped me to be able to identify 1, 2s, 1, 2, 1, 2s of a little smaller degree in there. Just little tips of the trade there and just how my brain works, how I'm able to find things. Now you notice that we get into this, some people would call this pattern traders would call this a rising wedge. To me, it's an ending diagonal. I haven't counted the subwaves here as detailed as I should because I'm not really trading this at least. But it has the right look to be an ending diagonal. If I was trading it and I was looking for a trade here to short, I would definitely go in and validate it and count out all of my sub waves and make sure all my I's are dotted, T's are crossed before I even consider making any trades. Um, but it has the right look here, so I'm assuming that that's what it is. So we get a 1, 2, 3, 4, 5. The waves are overlapping, so what that means is typically whenever you have an impulse wave, you can't have your fourth wave going into the territory of the first. But as you can see, it does here. So you have wave overlap, right? So that's very typical within ending diagonal. You'll notice here you get the classic decreasing volume playing out until the end, and then you get a little volume spike. So it's very typical for an ending diagonal. It's good enough for me to call it for this charting purpose here. So now that leaves the question: where are we? So it's difficult to call because we've had the golden cross. So that's to me a pretty strong sign. So long as we aren't in a trading range, it doesn't look like we're in a trading range so far. But something to consider is if we think about the rule of alternation, it says that if you have in the second wave, for example, if it's a very quick, sharp second wave, then your fourth wave is more likely to be sideways and prolonged. So if we look down here, this is the 2 wave of the fourth that we're looking at, and you see how quick it wasn't necessarily very sharp, but it was very quick, and then we were off again. So that leads me to believe that it's very possible we could be seeing some sort of a sideways correction here. I don't typically trade fourth waves. They're very difficult to trade in the sense that typically a fourth wave is where you're going to see a lot of sideways movement. If we get something like this, where we get a very clear triangle, I would trade the E of the fourth wave because triangles in Elliott wave theory go A, B, C, D, E, and then E, you get a volume spike, and then you launch. So I would trade that. But other than trading a triangle and a fourth wave, I really try to stay away from them because they can be very tricky. As a trader, I have unlimited opportunities in the markets. So why would I try to trade one of the more difficult waves to trade? I'd much rather pick the low-hanging fruit, take my money, less stress, so on and so forth. Um, but I'm gonna work this under the assumption that we are putting in an ABC and we haven't completed yet, because I think that it has the right look for that. And even this, I don't think I think I looked at this the other day, and it doesn't really qualify as an ending diagonal, but it certainly it just looks like it's getting exhausted. But we'll just have to see. So what I would do here to try to find an area of confluence, I would measure the length of the A projected from the B. So what I'm going to do is I'm going to come up here. The reason I'm doing this off to the right is just so that it's a little bit more organized. I have to keep everything organized, otherwise I get things confused and mixed up, and it's just better for me to be 100% organized. Okay, so there we have a 100% projection, which would bring the price down to 22,160. It's interesting. Uh, we also have a low volume node there that I marked on the volume profile, so I find that interesting. The median line of this pitchfork is right there. Um, we can pull up the way you would draw a channel for an ABC correction is you would start at the origin of your A wave. You would draw through the completion of your B. I don't know whether it's completed yet. It probably is. I mean, it's certainly looking at the wave projection here, it's gone past the 1618, so it's possible that it's completed. We have a low volume node coming up here, so if it's going to go a little higher, it wouldn't go much higher, assuming if it's going to come down for the C leg. So you would want to draw through the completed B wave and drag it down to the completion of the A. So what pops out to me here is how the channel is being respected very well. Just making these 2 points connect and then dragging it down, we can see that it's come up, tested it, test. It's holding it very well, even though in the median line here, you bust through, you come back, you test it, and then you're off. So I like that channel. I like that market structure there. And then it's intersecting that area of confluence. So if we do get something like this, I would expect it to come down like so. So that's how you're able to find a little area of confluence. Something else that I can do here is I can pull up the algorithms, see what they're doing. Okay, so draw that. This needs to be modified to the. Okay. All right, so I'm gonna go ahead and delete the arrow because you don't need to see that anymore. All right, so look what the algos have done. You zoom in there, boom, right to the 618, and it sells. So that's interesting. Now we know that their target is significantly lower. It's down at 20,000. I don't think we get that low, to be honest, just because that was the prior market all-time high. And even so, this is questionable to me because it's really close to the prior market's all-time high. My gut tells me we don't get down here. This would be the bear case, though, forward correction. But just my instincts, it's just telling me we're not going to get there. I don't think the market sentiment is there to drive it that low. I mean, 22,000 is pretty low for Bitcoin, especially considering that, we come over here, we take a look. Right there was the prior market all-time high. So I just don't think we're going to get that low. I mean, it could. It's possible, but I don't think we will. So next thing that we can look at would be the bull case, which would be that let me see here. Go ahead and delete that, delete that, delete that, delete that. Okay. So now where would the fifth end is I would come in here and I would measure the first wave, right? And then I would project it from the 4, looking for a 100% extension being the most likely target, which would bring it up here to the $100,000 price range, which is interesting because that's also going to be a psychological level. Let's go to the bigger picture. So I need to adjust this to here. And I need to drop that back down to the inside. Okay, so if we're going to come back up, right, and assuming that it's going to end sometime around end of January, and we're going to touch the top side of this channel, that would put it right around 103,000 if it did that. If it wicked through, you know, maybe 125. It's hard to say, but I'm just going to go with the top of the channel. Actually, you know what I can do is I can put on a parallel. Gives us a better idea. So, okay, so the last cycle, which was extremely bullish, we went all the way up and we almost touched that second one. So, given that the most likely extension for a fifth wave is 100K, and the top of this channel here is 100K, and assuming that the 120% lengthening cycle holds, I'm thinking around 100,000 would be the top. If things get fairly bullish, I would say, oh wow, oh, that could go all the way up to 200K. That'd be really interesting if it did that. But I have to go off of probabilities. So I would say 100K is most likely the target. I don't plan on selling anything there. I mean, I'm holding my positions for a very long time. I mean, I'm talking 10 years or more. So that is my analysis for Bitcoin. If you have any questions, go ahead and drop a comment in the comment section, and please like the video. I'll talk to y'all soon. Bye.